All right, good afternoon, everybody. We're going to call to order the Administration, Investment, and Fiscal Management Board meeting for February 19th. Madam Clerk, can you please call the roll?
Yes, thank you, Chair. Member Colville?
Here.
Member Toole? Here. O'Toole, excuse me. Member Tamayo?
Here.
Member Zamudan? He's absent. And Chair Coletta.
I am here. Would everyone please rise for the land acknowledgement and Pledge of Allegiance? To the original people of this land, the Nisenan people, the Southern Maidu, Valley and Plains Miwok, Patwin Wintun peoples, and the people of the Wilton Rancheria, Sacramento's only federally recognized tribe. May we acknowledge and honor the Native people who came before us and still walk beside us today on these ancestral lands by choosing to gather together today in the active practice of acknowledgement and appreciation for Sacramento's indigenous people's history, contributions, and lives. Pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, so we'll move on to the consent calendar. Do we have a motion?
I'll move it.
Second. Do we have any public comment?
No, we do not. Thank you.
Do we have any board member comments or questions? Okay, so all in favor, please say aye. Aye. Opposed, abstentions? So it passed. So we'll move on to the discussion calendar. Item number 4, the SCRS Quarterly Investment Report.
Good afternoon. I'm going to actually be going first today. I know the order got reversed.
Sure.
So I'm going to touch on a couple quick points on our internal quarterly report. And then Jeff will go over the Siegel report and some bigger picture on markets. So the first thing I wanted to point out in the quarterly report is in the fixed account, we did make quite a few changes. During the quarter, we raised about $3.5 million out of the equities that had really run up quite a bit. So we opted to liquidate those and send those over to the fixed fund. So you can see that contribution sitting there on that page 7 that says $3.5 million. So that's what that was. So we continue to put funds to work in that account over 4%. We are, however, starting to see some bonds get called in the 4 to 5% range. There are very few bonds in the account that are callable. I tend to look towards bullets, but there are some bonds that we have seen being taken away. Luckily, because the curve hasn't moved too much and interest rates have been fairly stable, we have been able to reinvest it. The current income on the account is about $4.5 million as of today, and that's up from $2.6 million in 21-22. Moving on to the large cap account. Get there. So on the large cap account, the midpoint of the year, returns were in the double digits. It's really been a very strong equity year up until probably the last 2 to 3 weeks, I would say. And again, as those continued to go up, we did liquidate from those, so you'll see a withdrawal on that, and that's going to be a combination of the assets we sold and a combination of the dividends being swept out for the operating account. Likewise, on the equity income account, for the first half of the year, it had a very strong return, approaching double digits there at 9.35 for the first 6 months of the year. And again, the $5.2 million in withdrawals, you'll see there is the combination of the dividend sweeping out and the money going back over to the fixed fund. So in January, another move that we did that you won't see until the next quarterly report is we had several bonds in the fixed income account that were sub 2%. And so we opted to do swaps on those. And so now there are no more bonds in the portfolio that are under 2%. And additionally, we raised some funds out of the equity accounts for the operating account. And so we now have sitting in each equity account all the funds to take care of operating all the way through July 1st, 2026. As a result of the run-up, we just thought it would be prudent to lock those gains in, sit in cash, so that if we started to see more volatility, we would not be forced sellers going into the rest of the fiscal year. So you won't see any of these transactions until the next quarter, but I just wanted to let you know what we've done in the month of January since this report was taken. Other than that, I just wanted to update. We mentioned the full liquidation strategy in the last meeting. Nothing has been done on that. We are continuing to monitor it. As of January, the fund overall was actually at a 9.5%. Our internal bogey that we've talked about is an overall return of 10% to lock in, 4% greater than the actuarial. So we're watching it. At the end of January, we got very close to 7,000 on the S&P, which is one of the triggers we were looking at. There was a lot of excitement over the Dow crossing 50,000, but it is such a narrow index, it's really not something that we're watching. We'd rather watch the broader S&P for the 7,000. So we'll continue to watch that and see if that is something we are going to do. But that is one of the reasons that we did the pre-sale of all the operating funds, just to, in a small way, to take advantage of the run-up in the equities. So we're sitting on about 2 to 3% in cash right now in the overall funds, and those will be allocated to the operating fund as the months go on. And that's all I have.
And just to add color to that, we are sincere in doing this. Stacy's got the trades loaded into the system, so it's that trigger. We're going to cash.
Yeah, thank you. Are there any other member comments? No? Were there any public comment?
Thank you, Chair. I have no public comments.
So is there a motion to accept the December report?
I'll move it.
Move it? Second?
Second.
Yeah, okay. All those in favor, please say aye. Aye. Opposed, abstention, it passes. So we'll move on to the quarterly investment report.
Okay, thank you. Get ours called up here. Yeah, here we go. Let me just talk a little bit about what's went on in the markets last year, and the point I want to make, and it ties in with what Stacy was saying. So the S&P 500 was up, you can see, almost 18% in calendar year 2025. That's 3 consecutive years of double-digit returns. The 2 prior years were 25% plus. I think only 2 or 3 times in history have there been 4 such consecutive years of double-digit returns. So we'll see what happens this year, but very unusual to string that many years that are so good back to back to back to back. And interestingly, I think in the markets last year, especially towards the end of the year, we started to see changes. In the prior years, it had been the Mag 7. Well, there was still some of that going on. There was a lot of AI-related themes running through the market. But in the fourth quarter, we saw a broadening out. We saw value stocks start doing better. Look at the table in the bottom right. Healthcare was up almost 12% in the fourth quarter. That tends to be a defensive sector. Yeah, for the year, IT and communication services still won, but you had strong returns from other sectors too. And so far this year, that's really exacerbated. That it's been the more defensive type things that have done better. Broadening out is probably healthy. It's not all just 5 or 7 stocks that are driving things. I also wanted to just point out the yield curves here on this page. So the Fed obviously did 2 rate cuts in the fourth quarter, October and December. Haven't done anything since, and based on the recent minutes of the last meeting, it kind of looks like they may be sitting still for a while. We'll see. It'll depend a lot on the data, inflation and jobs and economic strength. But the long-term rates, you can see in the chart at the top, have been very sticky. And that's really that inflation concern, I think. That's, if you're going to tie your money up for a long time, you want to be sure it's going to be worth something. And so that's helped keep longer-term rates up while the Fed, can control the short term. And you can see they've pushed that down. The green line is where we ended December. The brown line was June, and then the gold line is September. So short-term rates have been coming down, at least through the end of the year, but long-term rates very, very sticky. So you've got a pretty steep yield curve here, which it wasn't that long ago you had an inverted yield curve. So things have definitely changed in the bond market. Still a lot of underlying volatility, but very solid returns from bonds. I mean, the broad market index was up over 7% last year. Okay, that's pretty good. So you put all that together, you're going to see some strong returns out of these portfolios, and Stacy's already alluded to that. Here, I just wanted to show you, these are the allocations, the last 2 quarter ends. So a little under in large cap growth, a little bit over in fixed income. This is as of year end. I'm looking at the bars on the left. Cash at that point was 1%. I think Stacy said it's now up above that because some additional cash raises. But this is, all still pretty close to target. And then here are the returns. So 2.5% for the quarter, almost 7.5% for the fiscal year, the first 6 months. Stacy said, and tuck another couple percent on top of that in January. Calendar year up 13%, well more than double the actuarial rate, ahead of the custom benchmark as well, and those comments apply across the board. And I think especially if you look out 5, 7, 10 years, well ahead of the actuarial rate over those time periods, as well as ahead of the custom benchmark. And then if you look down at the individual components, both of the equity portfolios outperformed their benchmarks in the quarter and for the year. And bonds right in line with the benchmark in the quarter and outperformed for the calendar year. So again, just very healthy returns across the board there. 2 other things I wanted to point out. I'm going to skip ahead a number of pages here. Excuse me. Just on the equities. These charts on the left are the risk return charts over 3 and 5 years. So your total domestic equity portfolio is the blue box. Less volatile than both the S&P 500 and the overall benchmark for the plan. So those strong returns have been generated with less risk, less volatility over both the 3 and 5 year periods. That's good to see. And then just one other thing, I'm going to go to the very last page of our report, thinking about potentially increasing fixed income exposure some more. It has been done in the past. So give me 1 second to get all the way back there. All right, so here's where we show what the benchmarks have been over time. If you look sort of in the middle there, the March 08 or to March 09 period, you see 50% in Bloomberg Aggregate Bond Index. So fixed income was 50% of the portfolio back then, and that's, of course, financial crisis. But even before that, it was 45%. So, having a substantial portion of the portfolio in bonds has been done before. Right now, you're at 40% for your target. But it's not like this has never been more conservatively invested. It has, if you go back there. So that's really all I had on that, unless there's any questions.
Are any member questions or comments?
Just one question. There we go. Just a question about the Magnificent Seven. I know everyone wants to ask about that probably, and if you don't know, that's fine. But what I seem to be hearing, had heard a couple of years ago, so it was sort of a consistent statistic that the Magnificent Seven were about 30% of, I think, the market. I'm not sure. I don't think it was S&P. I think it was just, well, yeah. Anyway, has that changed? Is there a new metric? And if you don't know, that's fine. But is there a new talking point on that?
So you're talking about how much the Mag 7 are as a weighting for the S&P? Is that
Yeah,
what you mean?
yeah.
They still are significant. I don't know if it's exactly 30%. But even with the fluctuations, they've just gotten so big. I mean, really, we've talked internally. We do have a small position in RSP, which is the equal-weighted S&P 500, which is a different way to look at it. It kind of takes out the noise of those top 7. And one of the reasons that we're outperforming in the large cap account is because the only exposure we have to those really volatile names is through the S&P, is through the SPY. So we're not playing that game right now, so it's working out very well, but they still are a very significant portion of the SPY, fortunate or unfortunate. So,
Thank you.
Yeah, and what's changed is the few stocks that make up, they're not quite the same seven. Like Tesla, obviously, has been somewhat weak, and even Apple has been somewhat weak. But some of the drug companies, because of the GLP-1 drugs, have jumped in there. So the makeup has changed a little bit, and they don't have a nice new catchy name for them. But the idea that, yes, 30 some odd % is made up of, the top few stocks make up that much of the benchmark, yes. Yeah.
Do we have any other member questions, comments? No? Do we have any public comment?
Thank you, Chair. No, we do not.
Okay, I think we need a motion to accept the report.
I'll move approval.
Second.
Okay, all those in favor, please say aye.
Aye.
Opposed, abstentions? All right, next is the financial, sorry, go ahead.
Wait, one other thing, just as I wrap up. I just wanted to let you know that I am planning to retire later this year. I will be at the next meeting, and the guy who's going to take over for me, his name is David Roll. He will be here. He just unfortunately couldn't come today, but he'll be here for the next meeting. He's a new hire a few months ago for us, but very experienced in both consulting and investment management. So you'll get to meet him at the next meeting. But I just wanted to give you a heads up that was coming.
Thank you. Okay, Osvaldo?
Is this working? Yep, okay. Hello, Osvaldo Lopez, Finance Manager, Department of Finance. Today I will be presenting the results of the financial statement audit related to the Sacramento City Employee Retirement System, SCERS, for the year ended June 30, 2025. So the financial statements for SCERS were audited by the independent audit firm, Macias, Gini & O'Connell, MGO. And I'm pleased to announce that we received an unmodified opinion. This is the best kind of opinion that you can get. It means that there was a clean audit. If you want additional information for the opinion, you can refer to pages 13 through 15 of the financial report. Let's see if this display. Is this working? Okay. All right. So that's kind of small, but that's page 20 of the report. What I want to mention here is basically the net position restricted for pension. There was almost no change during the year, so the net position decreased from 253.5 million to 253.4. So as I mentioned before, almost no changes. This means that total assets, total liabilities, they were very consistent. So I'm not going to go into detail on each line item because there were no major changes. So I'm going. Now moving on to the next page, this is page 21 of the report. This shows the statement of changes in planned fiduciary net position. Here we can see one of the things that I want to mention is the employer contribution on the top, right here. So the contributions during fiscal year 24 were 1.4 million. This is very consistent with last year, also 1.4 million. They are going to decrease going forward. Then the net investment income, it also decreased from 30.5 million in fiscal year 24 to 26.3 million in fiscal year 25. This is the biggest change that we can see on the report. The main reason for the decrease was the net appreciation in the fair value of investment, which was 19.4 million in fiscal year 25 compared to 23 million in fiscal year 24. Finally, on this page, as we can see, the benefits payments, they were very consistent. 27 million in fiscal year 27 million in fiscal year 24. It decreased to 26.4 million in 25. This is page 29 of the report. One of the things that I want to mention here is that the city net pension asset, yeah, we have an asset instead of a liability, which is pretty good. As of 6/30/25 is 22.1 million. This is an increase in the net pension asset of 18 million when we compare it to the previous year, where the balance was 4.1 million. Also, the funding status increased from 101.6% in fiscal year 24 to 109.6% in fiscal year 25. There are additional details if you want to see why it fluctuated, it changed in pages 4, 5, and 6 of Appendix B. So finally, the last thing that I want to mention, as we know, this is a closed plan, and therefore the plan is getting smaller. The total plan members decreased from 739 members in fiscal year 24 to 710 members in fiscal year 25, with only one active plan member as of 6/30/25. With that, I conclude my presentation, and I'm open for any questions. Thank you.
Thank you. Are there any member questions or comments? No? Any public comment?
Thank you, Chair. We know no public comments.
And this is a receive and file, so we'll move to the next. Thank you, Osvaldo.
Thank you.
We'll move to the next item, which is the selection of chair and vice chair for calendar year 2026. And I think since Yusuf's not here, he gets it. No.
I don't know when their terms are up. When is, Dave, do you know when your term's up?
I don't know offhand.
I mean, I'd love to have new blood up here doing it, but.
I have a little script I can read. if
Sure.
you'd like. All right, good afternoon. This is Rosanna Montesinos from the City Clerk's Office. All the detailed information is your staff report, but I have a few important reminders. We will hear nominations and vote for chair first, then followed by vice chair. The newly elected chair and vice chair will begin their terms the next regular meeting. Members may nominate another member or themselves. And please remember that a member may not serve more than 2 calendar years in either position. As such, Member Batter is eligible to serve as chair, and Member Colville is eligible to serve as vice chair. If you wish to make a nomination, you may. Did I answer your question, or no?
We don't have a member Bader.
Oh.
He's no longer, he's down
You
there.
did such a good job.
Such a good job.
You did such
We
a good
just
job. We're
included
bringing you back, Jason.
I apologize.
He's hiding in
I
the
saw the
crowd.
look in your eyes. I was like, wait, did I do something? So I apologize. So it looks
I
like,
stole him.
so vice chair, John Colville, you've done 2 years.
I'm
And
out, right?
so you're out for vice chair, but you can be elected for chair. And, so we could do chair first, if there are any nominations.
Pardon my interruption. Jacob Redruth from the City Clerk's Office. Both Member O'Toole and Member Zamanudin's terms expire at the end of this year, so at the end of 2026,
Thank you, Jacob.
Calendar year or fiscal year, Jacob?
calendar year.
Thank you.
Have a motion?
Nomination.
Sure, yeah.
I nominate Chair Coletto for another term as president.
Down with that?
Okay, is that a second?
Second, all in favor, please say aye.
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 Opposed, abstentions?
And I nominate David for as vice chair.
Second.
For a year. Yusuf's not here.
Okay, all those in favor, please say aye.
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 Aye. Opposed, abstentions? Passes. So we have our chair and vice chair. Are there any member comments, ideas, and questions? None. Is there any public comment on items not on the agenda?
Thank you, Chair. No, we do not have any.
Okay, well, thank you, everyone. We are adjourned.
Very good.
Thank you, Jacob.
Jacob's the man on the spot.